Hi guys, welcome back to my channel, the best place to be wherever you are on your wealth journey right now. Today I want to talk about the new 95% mortgages government-backed scheme, which is aimed to help first-time buyers and home movers at the moment. What exactly is the scheme, how can you benefit from it, and is it worth it? Plus I'll go through a couple of things to look out for as well. Okay, so why has the scheme been introduced? Well, this is the government's latest plan to help first-time buyers and home movers. They have targets that they have to meet, particularly regarding first-time buyers, and this 95% mortgages thing is their latest attempt at doing that. They have had many iterations of this sort of scheme before, notably the Help to Buy scheme, which ran from 2013 to 2016, and which helped roughly 100,000 first-time buyers onto the property ladder. Although this scheme is the first time to my knowledge that the government have also been able to help home movers as well as first-time buyers. So it's quite an exciting time, especially if you're thinking of upsizing or downsizing as well. So what does the scheme entail then? Well, if you're a first-time buyer or a home mover, you can go to one of a select pool of lenders who will offer you a 95% loan-to-value mortgage. Now, loan to value, if you're not sure, is the amount of loan you get in comparison with the value of the property. So if you purchase a property for £100,000, let's say, and you've got a 95% loan to value mortgage, then your mortgage would be £95,000 and your deposit would be the £5,000 remaining that you would need to find from your own funds. Under the scheme, you can purchase a property up to £600,000. And the scheme is going to run, well, it started a couple of weeks ago on the 19th of April 2021, and it's aimed to run until the end of December 2022. In terms of mortgage lending, lenders often find homeowners and particularly first-time buyers can be a bit of a risk when it comes to lending. Because if we think about it, you're going to be using your earned income to pay that mortgage, and if anything happens to your earned income, that can be a risk to the lender because it may mean that you default on your loan. And especially at the moment with COVID and everything that happened last year and sort of ongoing to this year, lenders are particularly cautious at the moment, which is why the government has introduced this scheme at this particular time. If we look at mortgages over the last couple of years, we can see that first-time buyer and home mover mortgages have roughly been at around 85 to 90% loan to value, but not as high as the 95%. Historically, there have been residential mortgages at 95%, both for home movers and first-time buyers, but lenders at the moment are preferring to stick with lower loan to values in wake of the pandemic, which is a very sensible and responsible response from the lenders there. I will say as well that 95% loan to value is quite a high loan to value, and because of that, interest rates may be more expensive than your lower loan to value mortgages. I would say if you have the extra deposit available, always go for the lowest loan to value you can, because that will keep your mortgage payments low long term. So lenders currently taking part in the scheme, or those that we know about at the time of me writing this video, are Lloyds, Halifax, Santander, Barclays, NatWest and Virgin Money. So all the main high street lenders there, plus I'm sure there'll be quite a few more lenders jumping into the mix on this as well. I will say as well that when looking for a mortgage, it's always a good idea to go to an independent mortgage broker to find a mortgage that suits your needs and your personal circumstances. Although it's tempting to go directly to a lender, particularly if it's somebody that you bank with already, it's always better to go to a mortgage broker just in case for some reason that lender can't lend to you, in which case you have an awful lot of hoops to jump through and it can be quite scary. So it's quite nice to have a mortgage broker, someone that you can lean on and rely on, and to let you know what's happening when you need it. So why is this scheme helpful then? Well, obviously it's helpful if you have a very low deposit of 5%, because it means that you can still get onto the property ladder or move home without having to break the bank. Now with this scheme, the government is giving the lenders the option to purchase a guarantee on the top 20% of your mortgage, a little bit like insurance. This means that if you do buy a property under the scheme and you subsequently default on your mortgage and you fail to make payments and the lender has to repossess the property, the government will compensate the lender for a portion of the losses they make there. The government guarantee will be in place for 7 years from the date that you purchase the property, because apparently after 7 years the likelihood that you default on your mortgage goes right down. Now this may sound really good and you may think to yourself, oh well, I might as well take advantage of this then, because if I do default on my mortgage it doesn't matter, if my house gets repossessed it doesn't matter. I will say that repossessions are no laughing matter and they are always matter. It is really important that you make sure that you maintain your minimum payments every month and make them on time. Failure to do that will affect your credit score. If you have a repossession, it is a very big and scary thing to go through, and I wouldn't wish it on my worst enemy. economy. So you really want to make sure that you are making your payments. If you don't do that, it will be on your credit file for a number of years, and it will limit the kinds of mortgages that you can get and other personal borrowing as well going forward. So you really want to make sure that you're making your monthly minimum payments. I have created a whole video about your credit report and why that's important, so I'll pop it just up here for you. So do check that one out if you're not sure. On the upside, this is a really good scheme because 5% deposit is achievable for most people, I would say. And don't forget as well that if you buy your property before the end of September 2021, then you would also benefit from the stamp duty holiday as well that we have at the moment. I will give you another word of warning though. There are 2 or 3 lenders taking part in the scheme that I know about at the moment who are not allowing you to take these types of mortgages out on new build property. Lenders generally feel that new build can be a lot more risky than existing property because generally with your new build property it will go down in value before it goes up, and because 95% loan to value is quite a high loan to value, chances are there may be a negative equity situation there which you don't really want to be going through either. It makes it much more risky for the mortgage lenders. And if anyone is interested in why this is, I did a whole video as well on new build property and whether or not you should buy one, and I'll pop that just up here as well and in the description underneath the video so that you can have a look at that one. If you are thinking about buying a new build property via the scheme, then I definitely recommend that you get yourself a good mortgage broker because they can go through all the different lenders and work out the right one for you based on exactly what it is you're buying and your personal circumstances as well. Another thing to mention is that as with any high loan to value mortgage, there is a risk of negative equity if the market crashes, and that goes for all property, not necessarily just new build. Negative equity happens when your house price dips below the amount of mortgage you have outstanding on the property. So for example, if you buy the property for £200,000 at 95% loan to value, you have £190,000 mortgage on the property. Let's say the property value goes down to £180,000, you now owe more on your mortgage than your property is actually worth. And if you sell the property at this point, you won't have enough to pay back your original mortgage. And again, I've done a video on negative equity, so if you want to check that one out, it's just up here and in the description underneath as well. Now, a question that has come up, particularly with relation to first-time buyers on this scheme, is can I use my lifetime ISA or my Help to Buy ISA to buy a property under the scheme? Now, I will say I'm not 100% sure on this, but in all fairness, I can't find anywhere that says you can't use those savings methods to pay for your deposit using this scheme. But I will say that if that is your plan to use your lifetime ISA or your Help to Buy ISA, please do double check with your solicitor, because I know that particularly with the lifetime ISA, there is a cap of a property value of $450,000 if you use your lifetime ISA for deposit, and there's a cap of $250,000 if you use your older Help to Buy ISA as deposit, unless you're buying in London, in which case it's £450,000 as well. So do just double check that with your solicitor before you do it. So this is a very useful scheme. I'm sure there are many of you that will benefit from this over the next year and a half. Do let me know how you get on with it in the comments just underneath the video. So I hope you found this video useful, guys. Do give me a thumbs up underneath if you have found it helpful. Also have a watch of these 2 videos up next because they will help with your wealth journey, hopefully. And don't forget to subscribe to the channel if you haven't done that yet as well. Thanks ever so much for watching this week, guys. Do stay safe and I'll see you in the next one.